Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader on XAUUSD. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold in front of us. And you can see that as per our expectation, gold broke the level of 1930 yesterday. And it made a high of almost 1935, and we can see that gold is going down right now. But before we discuss about the levels, you can clearly see that the volatility of the market is very low. And before and even like FOMC, the volatility of the market remains like this. So if the volatility remains like this, then do not expect a huge move in the market. Do not expect a big breakout or breakdown in the market if the volatility remains like this. But if market surprises us during the US session, then you can try to go with the flow. Otherwise, try to look for level to level trade only to be on a safer side. So yesterday, gold tested 1930 level many times. So we were hoping that market would break the level and we would get a quick buy opportunity above 1930.31, and we got it. And then we also discussed about the selling opportunity around 1934 to 1936, and we can see that right now market is going down. To be honest, I missed this opportunity because I was sleeping. Okay, in fact, probably all the Indians missed the opportunity because when market reversed from 1934 level, we all were sleeping. Okay, but right now you can see that gold is standing at 1932 right now. Yes, further downside on the chart of gold is possible, but I am recording this video in the Asian session, and we can clearly see that the volume of the market is not very high. So in this scenario, you can expect that the previous support of the previous resistance of 1930 will be acting as the new support for the market. So one or two red candles may form, but you need to look at the size of the candle. If you see the size of the candle like this, then you can expect the 1930.50 will be acting as the new support, and you can go for a buy position. But keep in mind, do not go for a big buy because this is not a major level. Okay, this is not a major level here. So try to go with a small buy position. That would be better and safer. And before I proceed with the other levels, I would like to mention one thing, that my dear friends, today we don't have any strong level in the market. Usually I always tell you guys that this is a major level, this is a minor level, this is a strong level, this is a weak level. But today we do not have any such reliable levels. All the levels seem to be a little bit dicey here. So I will not say that okay, we should get here, we should get a buy here, we should get a sell here. So things are a little bit critical right now. So I'll say that on each and every level, whatever you do, follow proper risk management, because right now we do not have any strong level on the chart of gold. So we need to be extra careful. So as I said right now, that if gold takes support around 1930 level, around 1929.50 level, we can look for a buy position. And if I draw the Fibonacci here, you can see, if we draw Fibonacci, then we have some support around 1927 to 1926. Okay, around 1927, 1926, we have some support, and then we have some next support around 1922 to 1921. So on the chart of gold, we have three support levels. Okay, I'm making it simple. So the first support is around 1930 level. So if the volatility of the market remains like this, then you can expect a bounce around 1930. But as I said, we don't have any strong levels on the chart of gold right now. So if market breaks, let's say during the European session, volume comes up and market breaks the level of 1930. In that case, your next support will be around 1924. So 1925 level. Around 1925, 1924, you have the FIBO 23.6% retracement level. So here you can expect under normal volatility, then market may take support. Simply switch to 50 minutes time frame and just see the market behavior. If you see market taking support, market showing price rejection from below, market forming a hammer pattern, bullish engulfing pattern, you can go for a buy. And then we have the second support around the third support around 1921, 1922 level because of previous price rejection around the area. So three support levels, but 1921-22 more or less good level, okay, medium level. This is also a medium level but not good level that it will work under high pressure, so be careful. And if market goes up, then we have selling opportunity around 1938 level. But right now you can clearly see the trend of the market is towards the upside. Market is reversing from the resistance, but still the at present the current trend of the market is towards the upside. As a result, you can see the market is not going for deep retracement, so try to follow the trend of the market. But if you want to go for reversal trade, if you have the experience, you can look for some selling opportunity around 1938 1939 because of this, nothing there. Again, I'll say that this is not a major level. Do not expect a complete reversal or something like that. Okay, these are minor levels, and usually under normal circumstances these levels do not work much. But as the volatility of the market is low, that's why you can expect that 1938-39 may work as resistance, and you can look for a quick selling opportunity for 30 to 40 pips by 40 pips. But today I'll be the 30 pips trader to be on a safer side. 1946, around 1946 we have the next resistance. 1946 seems to be a good one, but the best resistance on the chart of gold is 1950 to 1952. But to be honest, I don't think so market will be going towards 1950 1952. So you can see that we have three levels at the top, three levels at the bottom, and only 1950-52 seems to be a good one. Rest of the levels, they are more or less good for day trading purpose only in a low volatile market. And for the last couple of days, the gold chart is not following the chart of DXY, so that's why I'm not bringing the chart of DXY. But yes, keep your one eye on the chart of US government bonds, because in case there is a sudden volatility on the chart of US government bonds, you'll see the impact on the chart of gold. You can see dollar slips on decline in T note yield, means treasury note. Okay. And tomorrow we have FOMC coming up, so yes, there's a high chance the market may remain like this. And be careful, okay, be careful, because you can see today we don't have any news, but tomorrow, Wednesday, September 28th, FOMC economic projections, FOMC statement. So yes, let's wait and watch. And be careful, do not gamble. Keep in mind, we are traders, not gamblers. We don't need to trade each and every day. Maybe you are a day trader, that doesn't mean that you need to trade every day. Okay, we are traders, we only trade when the opportunity is right. And if you have missed any opportunity, then market is not going anywhere. You don't need to lose your patience, you don't need to gamble with your capital. Okay, market will give you plenty of opportunities in the future. And as of now, on the chart of gold, we don't have any major levels, so we need to be careful. And if you want to avoid, if you're a beginner, then you can avoid it, because after all, protection of the capital is very, very important. Okay, so that's all from my side, my dear friends. Please do your own analysis. This is my analysis. Okay, and bye bye, take care, see ya tomorrow.